Hi, a very good afternoon, everyone. Welcome to uLaw CPD webinar. Topic for today's session is Law Society Bookkeeping Compliance. It is accredited for 1 hour of professionalism CPD credits, and I'll be sharing the details of today's webinar alongside with the attendance link and the credit details on the chat window towards the end of the session. The session is being recorded and will be available on our YouTube platform probably by early next week. So the ones joining in a little late, please make sure to log in to our YouTube channel to educate yourself with the first few minutes. I do see more folks joining in, so it'll be nice to give them a couple minutes to settle in as we get started off. If anybody do not find my audio clear enough or loud enough, I request you to please switch to the phone audio, and do let me know if it's like too low or not very clear. Do let me know on the chat window at any time. I can double check at my end too. I am using a phone audio, so it should be clear and loud. During this presentation, we would be walking you through a little agenda that we have set for this next 1 hour. And as you all can see, the topic focusing on bookkeeping compliance is laid out by Law Society. We are going to see what are the requirements from your end to satisfy as a legal professional and to fulfill the needs for the Law Society compliances from the accounting standpoint. We have in the past few weeks seen from the client management or client intake and matter management and file management perspective, but this is a little bit more intense, I would say, in the sense, because obviously it involves numbers, it involves compliances, that also talks about trust compliance, ledgers, journals, fee books, and other compliance documents, including Form 9As, deposit slips, and what are the right time in which you produce them, what are the details that needs to be completed to ensure these are complete documents, because we can generate these documents incomplete, thinking we have generated and we are compliant, but the completeness of the information is more important for you all to stay compliant with Law Society. So keeping that in mind, we're going to be discussing about the ledgers, journals, fee books, reconciliation reports, and different documents that you need to generate or produce in terms of compliance reports, alongside with what are the benefits of using a legal accounting software. Since I represent uLaw, I will definitely make sure to walk you through it towards end. Just making sure if I'm audible, be kind if one of you could let me know on the chat window if I'm audible enough. I do see somebody saying they cannot hear me. Maybe that's a few minutes ago. If you're able to hear me, please let me know. It'll be great. I think Shan Law Office, you had mentioned you're not able to hear me. Are you able to hear me now if you're still there? Anybody could let me know if you're able to hear me. It would be great, just so that I could get started off. That's great. Thank you. Thank you so much for confirming. Um, oh, thank you. Perfect. All right. So as you all know, accounting plays a vital role in ensuring proper accounting, rather, in ensuring that your journals and ledgers feed in the right information, and which in turn helps you reconcile your books. And to keep the process simple, what are certain things that you could be doing? Definitely have a software that will help you with data entry and also helping you with double entry bookkeeping, in the sense you are no more doing things manually. You don't have to sit and write entries, sit and do them in the spreadsheet or even in a general accounting software, which will not give you the reports that you would need. So end of the day, posting into subledgers and journals with the respective accounts, like either it's your general bank or your trust bank, and then whether you're invoicing, whether you're raising in a payable, which is your accounts payable when somebody has to pay you, like a client especially, accounts receivable when a client has to pay you, or accounts payable when you have been issued an invoice and you need to make the payment to somebody. So all of these fall into the picture of accounting system and the software that you're using. So you may have multiple bank accounts that you need to keep in mind, that each of your bank accounts will have certain transactions that will have to be recorded under files, which is matters if the client pays you, and then you need to raise an invoice, you need to transfer the money from trust to the general if so, and then fulfill this entire process of accounting system that will ensure that you comply. But in the meantime, we've evolved over the period. There has been times where people would manually do the bookkeeping or data entry. People would write paper pen, then, would have just to be posting into subledgers, and then, but only thing is that it would be, there's always room for errors. There's always, human errors, and then time consuming. Obviously, if there are a larger number of transactions, then, came into picture the spreadsheet, where you will still use a spreadsheet and maybe formulas and do the mathematics, arithmetic here, calculations, and then still there could be wrong ledger postings, there could be errors that could, because of the incorrect formulas, some fields might not be entered in. So keeping that in mind, we evolved into using general accounting software, more like an accounting software that any business would use, not specific to legal account, which will have automatic ledger postings, which would have financial reports that gets produced, which is like balance sheet, trial balance, P&L, for accounting purposes again. And this again did not suffice. As a legal professional, you would need more in terms of fee book analysis to be made on Form 9Es, and then reconciliation reports. So the requirement only kept increasing. Then came into picture this legal accounting software. What does it do? It's absolutely designed for lawyers, paralegals, making sure that you're able to add your trust accounting. Trust accounting is a liability because you are handling money from your client, which is still not yours. It is a liability. It is called as trust among clients. You are basically holding money from your clients as a retainer, and then as you progress with the file, you invoice them, docket and invoice them, and then make the money yours. So when you make the money yours, you move the money from trust to the general, which is your business account, and then these are completely designed for trust accounting, and these legal accounting softwares help you for automatic calculations, sub ledgers posting, And then your journals, bookkeeping, other stuff, everything is taken care over here. All the reports are very specific to a legal professional needs, keeping in mind could be e-book, could be deposit slips, Form 9As, journals, ledgers, disbursements, journals again, uh, reconciliation reports that includes both trust in general and all of it. While that takes place, what happens to these ledgers? Now, many times we only know that somebody walks into your office asking for a service, and you intake them, you do the compliance, conflict check, everything that is needed for a preliminary check. Then you onboard them, you bring them on to your matter list, and then you start servicing them rather. And then comes into the picture, retainer agreement. So when you get a retainer, what is the first thing you do? You deposit it to the trust, whichever is the method of payment, keep that in mind. If it's cash, within 24 hours, you're required to be placing it into the trust account and issue them a cash receipt. And every transaction, once received and disbursed, needs to be recorded in the ledgers, in respective ledgers, whether it is a receipt or a disbursement, whether it's into the trust or general, has to be recorded accordingly. And this will have a few information that you will need to pay attention to, like, date, method of payment, particulars. What was it? Was it a retainer? Or it was a down payment for a mortgage from a client if you're a real estate lawyer? Or was it like proceeds from a settlement for a client? Anything can come into trust, any one of these, right? So make sure that they're falling into these samples. And from there, you would be able to disperse them, and that comes into the disbursements too, respectively trust. And if you're dispersing from trust to the general, which is called as a transfer, you will have to raise an invoice. And again, if you're raising an invoice, you want to make sure the work has been entered into the invoice as a flat rate or a billable time. And again, once the invoice is raised, you can do the transfer from trust to the general. While that transfer happens, the next thing that you're looking to do is fee that gets collected has to also be remitted to HST or GST or PST in case there are taxes applicable. So you want to make sure your applicable taxes are also recorded appropriately. If you are not eligible, or if you do not have the eligibility for collecting taxes yet, you're a new entrepreneur for that case, you can accordingly make your taxes portion 0 while charging the invoice. Hence, you will not see the billing to client with the respective taxes. It will be taxes exempt. Until, I think, if I'm not wrong, 30,000 or 32,000 for HST. If you're in Ontario, you're a new entrepreneur, you're not registered for HST yet, and your allowance is somewhere between 30 to 32K, if I'm not wrong. And until you hit that slab, you can be tax exempt and don't have to charge your clients accordingly. So these are few things that you actually gather as information while you're working on these bookkeeping, and make sure that the ledgers that you see here as samples are pretty much similar to what you're using too. So with that, we also have, the journals, which is more like a drill down version of your ledgers, right? Because in ledgers, you have both receipts and disbursements, that is incoming wire and outgoing, both in the same, into the same, I would say, posting. However, when you take journals are more in-depth version of what you would like to see. And of that, you have purpose of funds, you have method of funds, you have particulars, you have received from details, or if it's a disbursement, who was it paid to, and more. In the meantime, we also have these receipts journals carrying information as to the method of payment, whether or not if it includes taxes, especially when it comes to your fee, legal fee, or any disbursements that are tax exempt. You would see whether the taxes portion is zero or not. So how do these information get transcribed here? For example, let's say you're recording a disbursement. When you're recording a disbursement, make sure that you go over from the top and you would enter in the date, the amount, particulars, the amount, whether it's tax exempt or not, and the amount that you're going to charge them. All of that comes into the picture, and that would show you the particulars with total and everything. While the following samples here are very similar to that. So every time you have a receipt into the trust, you will say trust receipt journal. And every time you have a trust receipt with trust disbursement, you will also have a trust disbursement journal. And very similar to that is the general receipt and general disbursement journal too. So these journals are recorded as you record the transactions. They go into the sub-ledgers and the journals gets posted to with the type of activity and receipt and other disbursements. Now, a few important here would be reconciliation reports, starting off with an accounting procedure that makes sure that you have the balance as per the bank statement to be matched with that of your books of accounts that has been entered. And that comes with balances and reduce any outstanding items. Let's say you have given out some checks and you have the checks ensuring that you have all the details laid out, like the check that was deposited or that has not been deposited, that has been outstanding rather, and also that you have your check number with the amount and everything else there. While that outstanding check is not checked off or it's not cleared, you would be showing them under our total outstanding versus anything that is an error. You will also show as a bank error into the deposits, anything other than your outstanding deposits. So you take the balance as per the bank statement, reduce the outstanding checks, add any outstanding deposits, which means that you have received a check from a client, but you have missed to deposit it into the bank. So you call it as an outstanding deposit. And then you also add or reduce bank error based on whether it's a negative bank error or a positive bank error. Again, if you're using the software will allow you to do these automatically. In the sense, of course, even there you have to clear any checks that has been outstanding was cleared in the subsequent months, or any outstanding deposits that was not cleared has to also be cleared accordingly. So basically you have to go step by step, line by line with that of your bank statements and update them in your trust reconciliation or your general reconciliation reports. The only difference that you see with that of trust and general reconciliation is that for a trust reconciliation, you will have a bank error field, and for a general, you will not have a bank error field, because bank errors are any transaction that was not supposed to happen from the trust, or it was not intended to happen from the trust. Let's say somebody took out a bank fee, or you wrongly removed money from a client's account, etc. Sorry, I didn't understand the question. Will the note be shared? Could you please repeat that? Could you please elaborate on that? Look, I'm also having some disturbance here on my side. Okay, can you give me a minute? apologize, I have to reconnect my audio. I hope everyone is able to hear me. I think I got the presentation notes be available. Yeah, sure. I mean, like this presentation entirely will be available on our YouTube platform. The session is being recorded. So I think all the presentation notes will be there. Should be fine. Just to summarize on the reconciliation for the trust activity, one of the key points that I always recommend to note here is try to go line by line with your trust report, with your bank trust statement. And this is an accounting procedure that involves not just anything that pertains to this month. There can be some checks that has been issued that has not been cleared, which has to be reduced. And then some of the checks that were deposited, that were provided to you by your clients that could have been outstanding, not deposited, you need to add them eventually. And then you would arrive at a reconciled trust balance. There's also a little factor here to note is the bank error, which is basically error from deposits or withdrawal that can be, made at both the sides, either the bank or you. And, it has to be, once it's fixed, you can take that off the reconciliation report in the following month. But until then, it has to be in the reconciliation as a plus or minus of the bank error from the balance as per the bank statements. So this activity overall consists of 4 steps where you need to record step 1, you need to record the balance as per the bank statement. Step 2, you need to record the outstanding checks. Step 3, any bank error. Step 3, any outstanding deposits. And step 4, any bank errors here. These are the 4 items that you would actually include, and the once that's done, you would be able to arrive at the reconciliation for trust. Now, reconciliation for general is just very similar, but there is no bank error field involved in there because it's your general bank account, which is your business account that gets reconciled, and there shouldn't be any bank error concept in there. Now, that was about reconciliation. But additional reports, we did see journals, 4 journals. There are 2 bank accounts, which is trust and general, 2 journals each for 2 bank accounts, receipt and disbursements respectively for trust and general. That makes it 4 journals, 2 ledgers, which is trust ledger and general ledger, as both receipts and disbursements gets recorded into one single type of activity. Rather, 2 types of activity gets recorded into one single document. And then the next thing would be the reconciliation reports. That makes it trust and general again with 2 reports. So 2 ledgers, 4 journals, and 2 reconciliation each makes it 8 mandatory reconciliation and compliance, bookkeeping compliance reports month. Now, the other reports along with that would be fee book, deposit slips, Form 9As, and multiple reconciliation if you have multiple trust accounts, that as well. Okay. Now, quickly looking into fee book. Now, fee book is basically a record that shows all your invoices for a specific period. And this includes your legal fee. Sometimes you won't be billing them legal fee yet, but you would want to raise a disbursement already, and disbursements billed as invoices to be recorded from clients. And any fee book that also records invoice numbers has a client with taxes paid or billed and paid, and also any without taxes. So it's a combination of legal fee disbursements, including taxes, excluding taxes, total billed. Mostly the sample here shows you very clearly the date, invoice number. Mostly there'll be a series that software would follow, starting off with the series and then a sequential order in which billing is done. And other compliance reports includes Form 9A. I'm sure many of you know if you're in Ontario transferring funds from trust to the general, and you would need to specify what is the reason for the same, whether it is a legal fee or for disbursement, whatever it is, you have to update them into your books of records. And EFT, electronic trust transfer requisition, which is Form 9, is one of the forms that will very clearly show you which bank account the amount has been taken out from, and also whether it was deposited into general, what was the general account details, and what was the reason for the transfer, whether it was legal fee or for disbursements, and which matter does it pertain to, this Form 9A, which client, which matter, and all the samples that you see here, again, including deposit slip if anybody had paid you in cash, and including cash receipts if issuing them a cash receipt. And all these samples that you see here are all bookkeeping requirements. So mostly the monthly compliances are also part of it. I'm sorry, someone says cannot hear. I'm not sure I reconnected my audio. I hope somebody can tell me if they hear me. Okay, great. Thank you, Jamie. That's okay. Thank you. Okay, can you? Don't worry in case anybody not being able to hear me at any point and you lost me. Try to reconnect to the phone audio or computer audio. Worst case, you will have the recording. So always follow our YouTube and then you can get the recording from there as well. All right, so coming back to the EFT forms that I was talking about, these are downloaded every time you move money from trust to the general electronically. So that's why it's called as electronic fund transfers, electronic trust transfer requisition, and it has a requisition number. The requisition numbers, sometimes we tend to miss it, but one important thing is once you raise an invoice, what is the amount you have to move from trust to the general, because the amount that is lying in your trust, the amount you've invoiced. So either it's going to be the full amount or a partial amount, whatever it is, once you move that in the real bank, it gives you like a requisition number or a reference number. And then you can immediately raise a Form 9A with that reference number, as that is the most important piece of information that goes into your Form 9A. A reference number that will be showing up on your bank statement, and when you're reconciling it or when your accountant is reconciling it, they will be able to refer to it and make the changes. Yeah, no, absolutely. Date, reason for description, that's the thing, Jamie, that's a very good point. And the thing with regards to using our software and Form 9A that gets automatically populated with date, the reason, because the reason is something that you're already showing up when you have raised the invoice. So we pick it up from the invoice, whether it's a legal fee or a disbursement, and it'll very clearly show under reason for payment. And if there is no reference number, I mean, technically we should have a reference number. Most of the banks give you a reference number, but what happens is when you are electronically moving the funds, we miss to take a screenshot or we miss to print the form which is showing the reference number. So that is where this happens. Or if genuinely your bank does not provide a reference number, then there's something that you need to ask your bank for and see if you can get that. A reference number definitely goes a long way. But yeah, there could be times like Mr. Jamie says, there cannot be a reference number. It is at least important we share other information as to who's the client and matter and date and amount. These are the things that gets auto-populated if you're using our software, because you are in the matter doing the transfer. So the client and matter details gets auto-recorded. Again, the date gets auto-recorded. All of these are automatically there, except the requisition number that you have to take from the bank and put it in there, the respective field, while filling out the Form 9. Yes. Yes, that's another nice point Mr. Jamie is sharing with you all. When transferring funds, there's always a print transaction button. So yes, this is something that I would highly recommend to do. So always print the transaction whatsoever happens. This will be a great backup for you to go back and refer to, for you, for your bookkeeper, for your accountants, for auditors if you're being audited too, and it'll definitely be a great reference anytime. Thank you, Mr. Jamie, for adding in such valuable points. So, yeah, that's about Form 9A. I don't know how many of you are just Ontario people attending today, but for Ontarians, this is a boon because our software produces Form 9A within seconds after you click on the method of payment as trust transfer or, trust to general transfer. Yeah, now comes the main point of discussion on how much time are you spending to manage all of this or managing all this. Honestly, if you ask me if you're someone who does this on a daily basis, it shouldn't take you more than 10 minutes to 20 minutes to complete a reconciliation. At the max, even if you have a high volume of transactions, 30 minutes. But if you're someone who just sits then once a month or once bi-weekly to update your transactions, both trust, general, receipts, disbursements, all put together, it is going to be a nightmare. That is where you will be spending a whole lot of time trying to understand when this transaction happened, who was the client, what was the matter, what was the amount, what is it taxable, non-taxable, is it something that has to be reclaimed for the disbursement? So sometimes the same information has to be recorded multiple times if you're not using a software, if you're not using a timely manner of recording the information. So double entry data has to be taken care of, making sure it touches the respective accounts, and that in turn helps you to record your transactions, reconcile them. So under various circumstances, matter management, which is the file management, plays a key role and plays a vital role in helping you reconcile your books without much errors. Honestly, I know matter management flows in through client matter management, and accounting is definitely a part of it. But as you all know, an efficient matter management will lead to a smooth, seamless accounting process too, especially when a docket is invoiced. You move money from trust to the general, you are eligible to do the needful and raise appropriate details, documents that is needed. So translating matter management workflow to seamless accounting is the key. The saving time, preventing errors, and making reconciliation simple. And recording these data happening when, then and there is definitely highly recommended. And, automatically maintaining the ledger, journals, overall workflow, and the bank records very, very close in the sense, I would say at least once a week. I mean, daily is amazing, but at least minimum is once a week required. So, on a weekly basis, you sit and update your accounts. Even better is if you're using a program like uLaw, connect the banks, let the bank do the disbursements portions, and the Bank Connect will help you populate those transactions where you only have to take action. Receipts are very naturally, blended. It just very naturally blends into the process where, you intake a client, you send them a retainer letter, they pay you. That is the first trust receipt. It's called as a retainer. Again, blends well into the process, nothing much there. Raise an invoice, transfer funds to trustee general. That is the second step where you would, include a disbursement portion, trust disbursement, trust transfer. Now, the third step is when they have to pay you more, whether you're collecting it into the general or whether you're collecting into the trust, respectively. And then transferring money from trustee general again. So these key steps where it involves you to go back and forth with the bank is where it needs some time. Now, about the benefits of legal accounting software, as you all know, we already discussed about this, where, we have recording events as and when they happen. And this is completely possible only when you have a legal accounting software, because you need a software to issue a receipt, you need a software to, raise an invoice, raise a retainer agreement, record all of these as and when they happen, so you keep it simple. And, end of the day, it's all about, the ease of use, accountability, analytics, compliances, and all of it. So it is really interesting to know that the software will do most of it, but will need your interference with updating details as and when it happens. So don't think when you have a software, it's all taken care. When you have the software, it simplifies the process. It straightens the process. It helps you to be compliant, and but you still need to go ahead recording the information, the data that needs to go into the respective ledgers, the journals, the fee book, the invoices, Form 9As, deposit slips, cash receipts, and more. So, not always it is when you have a software, it's that the software does everything. And it does everything. Yes, it definitely makes your life easier, but you need to definitely intervene too to make things more, straighten it out and make sure that they're all in the place. I'd like to use the last few minutes. We have about 15 minutes to go over whatever we've discussed today using our own software. uLaw practice. So I welcome you to look into our software. If you're a non-uLaw user, this is a nice time for you to understand how the software works. If you are a uLaw user too, it is a good time for you to, freshen up your skills, usage of uLaw. If there's anything, please use the chat window and I'll be happy to walk you through that as well. So we were currently discussing about bookkeeping compliances. Mainly the documents that we discussed were 4 journals, 2 ledgers, 2 reconciliation reports. Actually, 3 reconciliation reports if you have multiple trust accounts. So they also have mixed trust reconciliation report. You only need to do that. You don't have to do the pool trust, but you will have to do mixed trust if you have multiple trust accounts. I've seen this mostly in case of real estate lawyers where they would have a pool trust and a mixed trust account where they would have multiple trust accounts to handle just real estate files and then the other files if they're also working on criminal or something else. Quickly walking you through where these are available under accounts, under compliance, under monthly compliance. There comes these ledgers, journals, reconciliation reports, fee book, Form 9A, and other reports too. Just to walk you through one quick example. I mean, I can just go about downloading these, but what information will I get? The information that gets transformed into the file. Let's just say you have a file with this client, and once you have the file, you add a few dockets, you raise invoice, you get a retainer. And then when you get a retainer, what happens? Because you send them a retainer letter. Once you send them a retainer letter, you get the retainer into your trust account. And once you get the retainer into the trust account, you go into the disbursements retainer tab. The date on which you got the retainer, suppose it was yesterday, the method of payment. Just watch carefully me entering these details and also issuing them a receipt, all under 1 minute. Okay, and then when I got these retainer, I decided to start the work. Let's say I do a flat rate, just to save some time, but to show you all how it works. Okay, so this is a flat rate of $250. And I also have a filing fee, add new disbursements. Let's say this was a disbursement paid from my trust account, was it tax exempt? So I'm entering the same amount at top and bottom because I am not charging my client any different amount. The same amount that I got charged is the same amount I'm charging them too. And it was a fee paid for the client, method of payment, everything entered in. And you can also print a check in case it's a check from the program. Okay. Now we have to go and erase this invoice to show you all how this looks on the journals and ledgers. Download. What's the invoice and legal fee? I go back to show you all how this looks at our end. Going to compliance, monthly compliance. And show before I do that. Sorry, one last step is to move the money from trust to the general. I have invoiced the client. I know what is available in the trust by simply clicking on question mark, clicking on transfer because that was the amount that was available. Okay. Then once you do that, you have the requisition number. You're choosing electronic fund transfer and transfer. Download the form name immediately. And if you all see the difference, the requisition number that I entered in the previous slide, JW100, automatically showed up here. And the rest of the information too. Okay, just download this. Ends up with all the information. Reason for the payment. I had a filing fee and a legal fee. The client and matter information with the respective institution numbers. Just have to sign them, put it into your file. Now when I go into compliance and monthly compliance, try to download today. My transaction was just this particular matter. And then I am going to download client's general ledgers. So 2 ledgers, and then going to show you the 4 journals. What happened in the client's trust receipt journal, then client's disbursement journal, okay. And while I do that, I also want to quickly show you all the fee book, how it records the fee, legal fee, with or without disbursements, and the taxes portion too. And the Form 9A I already showed you all. Before we go ahead, the trust reconciliation. uLaw, you just have to enter the date, step 1, and then you have to enter the balance as per the bank statement. And then the transactions will show up at the bottom for you to just clear them off, whichever you see in the bank statements. So the ones you don't clear, means that it is not available in your bank statement for clearing. And then just reconcile and move. So you all know, I'm going to quickly walk you through the PDF that I downloaded. So here's the ledger showing client trust activity for both payments coming in and going out. Similar to that is the general ledger, the invoice that was raised, total, and if that was paid through trust transfer, and out of the journals with a single type of activity, just receipts, and into journal very similarly if there's any payments, and also have this with the fee book and the disbursements showing if anything with HST or without HST. In this case, filing fee was carefully noted without HST, and the same has been entered here and shown accordingly. The fee book as well, we do see that the disbursement has no HST, so it's 0, but the legal fee with HST showing the same. Any questions? I'd be appreciate if you can let me know on the chat window. But the key points that we've discussed here is about the data entry with complete information that includes right from the top, which is the date, the amount, the particulars, the method of payments. Even the smallest of the reference number makes a big difference. So if anybody has any questions regarding any of these, I'd be appreciative if you enter it on the chat window, and I'd be happy to walk you through the same. But if not, bookkeeping is all about data entry and reconciliation and timely manner of document generations too. So if you have anything in regards to today's session, please do use the chat window and let me know. I would be here for another few minutes, let's say 5 to 10 minutes, and I'll start sharing on the chat window the attendance for today's session and also the details for today's webinar. But if you at all have any question in the meantime, please let me know in the chat window, and I'll be more than happy to go through the same. So as you all can see, this is the topic for today's session. I'll be sharing it on the chat window and the attendance link too. Once again, thank you everyone for coming in for today's webinar. The topic information and attendance link are being posted right now. Please make a note and you have any questions, let us know. Thank you and have a wonderful weekend. We will see you with another CPD topic next Friday. And hopefully everyone relax and join back, and do bring your friend. We have quite a few offers going on, which I would be sharing once we are done. If we don't have any questions, I'd like to turn off the recording, keep it short for the ones watching it on the YouTube later. But hang in there, as I'm going to share more details for you to take back home, share with your friends, and be aware of the offers too. Thank you and have a good day.